Crypto is often described as a market that never sleeps, but that description is misleading. Price does not move because time passes, it moves when liquidity arrives and intent is revealed. Before my journey into crypto investing, my professional background was in cybersecurity within the commercial banking sector, working around the systems that move and protect institutional capital. That exposure changed how I see markets, not as chaos, but as structured behavior. What you're about to hear is how global crypto markets actually move, session by session. Crypto trades 24 hours a day, 7 days a week, but opportunity does not. Most traders fail because they treat crypto like a constant battlefield. In reality, it is a rotating stage where different actors appear at different times. Liquidity is the only force that matters, and liquidity follows people, institutions, and time zones. What confuses most traders is accessibility. Because the market is always open, they assume it is always tradable. But availability is not the same thing as quality. Most hours exist to support positioning, not profit. Professional capital does not deploy randomly. It deploys when counterparties exist, and those counterparties appear on a schedule. The global crypto market moves in three primary sessions: the Asian session, the London session, and the New York session. Each session has a distinct personality, risk profile, and strategic use. These sessions are not arbitrary labels. They are reflections of when real decision makers are active, when banks open, when funds rebalance, when risk desks come online. Ignoring this framework is like trading equities without knowing when the stock market opens. Let's start with the Asian session. The Asian session runs roughly from early evening to early morning Eastern Standard Time. This is when retail participation dominates and institutional presence is limited. Price action during this session is often thin, fragmented, and deceptive. Moves occur, but they lack follow through. This is where false breakouts form. This is where stops are hunted. This is where price is stretched away from fair value. During this session, price can travel far with very little resistance. That movement feels convincing, but it is structurally weak. Without institutional volume, price has no obligation to hold. It is free to wander. Asian session moves frequently exist to set traps, not trends. Liquidity is light, spreads widen, and price can be pushed with relatively little capital. That makes this session ideal for accumulation, distribution, and manipulation. If you are trading aggressively during this window, you are trading at a structural disadvantage. The Asian session is best used for observation, not conviction. This is where patient capital prepares the board. Levels are engineered, liquidity is staged. When traders wake up and see these moves later, they assume momentum. In reality, they are walking into a pre-built liquidity. Next comes the London session. The London session begins several hours before the US market opens. This is the transition phase, the handoff between overnight positioning and institutional intent. Liquidity increases noticeably, volume expands, direction begins to matter. This is where the market begins to clean itself up. Excess is addressed, inefficient moves are corrected. London is where the market starts to show its hand. Moves during this session often correct Asian excesses. False breakouts are retraced, liquidity gaps are filled. This is where structure is repaired or intentionally broken. London does not chase price, it interrogates it. If a move cannot survive London, it was never strong to begin with. The London session is critical because it sets the tone. It aligns price closer to where real money is willing to transact. Many of the day's key levels are formed here, not completed, but defined. These levels become reference points for the entire day. They act as magnets, ceilings, or floors once New York opens. When the New York market opens, that's when price discovery begins. This is where the market becomes real. The New York session aligns crypto with traditional financial markets, equities, bonds, derivatives, and macro flows. This is where crypto stops trading in isolation and starts responding to the global financial system. This is when institutional capital is active. This is when funds rebalance. This is when risk is expressed intentionally. Volume peaks, volatility becomes purposeful, trends either confirm or fail decisively. This is where conviction shows up and where hesitation is punished. If a move survives the New York session, it matters. If it doesn't, it was noise. This is where genuine breakouts occur or where the market violently reverses. Most meaningful crypto price discovery happens during this window. New York does not create randomness, it absolutely resolves it. Understanding these sessions changes how you trade. You stop chasing every move, you stop treating every candle as equal, you stop confusing motion with opportunity. You begin asking better questions. Who is active right now? Who benefits from this move? And who is being trapped? Instead, you wait. You wait for liquidity. You wait for confirmations. You trade when the market is most honest, not when it is most active. Patience is not passive, it is selective aggression. Crypto is not random, it is rhythmic. And once you start understanding the rhythm, the market stops feeling chaotic and starts feeling predictable. Not because it becomes easy, but because it finally makes sense. This channel exists for a reason. Most people enter crypto without a framework. They are shown charts, but not structure, indicators, but not context, signals, but not intent. That gap is where capital gets taken. Our focus here is not prediction, it is protection through understanding. Markets do not exploit ignorance accidentally, they rely on it. The goal is not to turn you into a day trader or to convince you that every move is an opportunity. The goal is to teach you when not to participate, because restraint is a form of an edge. Everything we publish is built around one principle: helping investors recognize when price is real and when it is engineered. That means studying liquidity, studying timing, studying behavior, not hype, not narratives, not noise. This is not entertainment first content. It is framework first. If you're here, it's likely because you've already felt something off, because the market felt aggressive, unforgiving, out of sync with what you were told. You're not wrong. Crypto rewards those who slow down, those who observe longer than they act, those who understand that most losses occur outside of high quality windows. This community is built for people who want clarity, not excitement, structure, not signals, and long-term survival, not short-term validation. You don't need to trade more. You need to trade with context. That is what this channel is here to provide. As we continue, we'll break down liquidity events, session behavior, market mechanics that most platforms never explain, not to make the market look simple, but to make it intelligible. Because once you understand how the market moves, you stop feeling chased by it. You start moving with it.